What's going on, guys? Midweek update. Everything looks good. AMC looks very good, very bullish, and is following the micro perfectly, tracking perfectly. SPY is very bullish. With that being said, let's get into it. So, starting with the macro on SPY, once again, descending broadening wedge for a year. Break out of it to the upside. Retest twice on it. Confirm the retest, reclaim the ascending triangle. I mentioned the descending broadening wedge transitioned into an ascending triangle. So confirm the retest on the wedge, reclaim the triangle, break out of the triangle to the upside, test, confirm the test, and then found more upside. Very bullish chart. Golden cross on the daily, and day number 53 in a row, closing over the 200 EMA. Very, very bullish. Today, SPY saw an absolute roller coaster of a day. Actually found a new high today. New local high, 439, I believe, was the high of the day. And found a downtrend from that high of the day. I think it was around 11 o'clock we hit that high. And then from then we found a downtrend until that stupid fucking meeting, the Fed speech, whatever the fuck it is. Until that, mentioned yesterday, you could expect some volatility around that time. And that's what happened. And from that downside that we saw from the top, we found even more downside, coming all the way down to 433 and change, actually filling the gap on the daily. Found a very nice bounce off of that and closed green. Doji today. This looks very good. That's very, very bullish. Closed the gap on the daily, closed green, and found a new local high today. This looks very, very good. Absolutely no complaints. Looks good. So, once again, jumping to the symmetry on SPY, where you have your descending broadening wedge transitioning into an ascending triangle. That resistance on the ascending triangle is 418. So, getting into the symmetry here. Once again, blue box is your middle. You break above the ascending triangle here to reject the macro. So the blue is your middle, where you find your lowest low. Coming into the red, now where you dip below this horizontal line at 380 in both. Both red boxes dip below that line. This one was slightly lower, again, to retest the macro. From that bottom, you come up to 418 on the dot, the top of the ascending triangle, and reject that in both greens. From there, you come to 380 on the dot in both, and find a bounce there. Perfectly symmetrical. From there, you come up to 430, have 3 touches on 430 before you break that to the upside. Same over here, 1, 2, 3, and 1, 2, and 3 before you break that to the upside. Next stop would be 438, where you hit 438 here, come down, retrace before breaking out of it. Now, I mentioned yesterday that I thought potentially that's what this was, the end of the day yesterday, where we came back down a little bit, retraced there. But it looks like today we actually got that, the rest of that move, where you come up to the 438, actually coming up to 438. Yesterday was 437, and then you come down before breaking out of it. It looks like that's what happened today. I'm expecting upside for SPY. Chart's extremely bullish. SPY is going to 450 relatively fast. I mentioned that could be this week. If not this week, definitely next week. And SPY is seeing new highs in the near future. So, with that being said, very bullish on SPY. Looks good. That dip that we saw today on SPY, actually, guess where we found a bounce? We have this uptrend here. Here's the ascending triangle that we broke out of, retested. And this trend line that we have, that's where we found our bounce today. So respecting this trend line very nicely from the breakout and the retest here, respecting the trend. Bounce off it again there, bounce there, bounce there. Found a new local high today, 439. Came down, found a perfect bounce right on that trend. Looks very good. This uptrend is very solid. Looks very good. Filled the gap on the daily and closed the day green. No complaints here. That looks very good to me. Still very bullish on SPY. Still expecting more upside for SPY and expecting 450 to come relatively fast. With that being said, once again, jumping into the market sync on SPY and AMC. So SPY breaking both macro patterns to the upside, descending broadening wedge and the ascending triangle. Here would be the macro breakout on the ascending triangle, retest, and you go. And on AMC, at the exact same time, has broken its macro pattern to the upside. And we were in a retest for over a month. And we confirmed the retest, and we found this uptrend now. Looks very good. Once again, just showing the market sync here. Market's about to squeeze. Everything looks very good. Everything is very bullish. Jumping into my macro. So up top is my macro perspective, where you have COVID right here, January 2020. Drop down into the green, red, and blue 3 fractal sequence here, leading to the squeeze in January. Come down, find an uptrend that takes you to the June squeeze. train to flag, break down from the flag, and reset back into the green, red, and blue. Tracking perfectly. The only difference here being that we're descending, but it's tracking absolutely perfectly. Again, zoomed in on the bottom would be the blue box that led up to the squeeze in January 2021. And then on the right would be the blue box of our current cycle that's tracking that will be taking us to our squeeze. Once again, first bottom, try peak, rejecting that resistance. Second bottom, lower low, uptrend and breakout, and the retest. Confirm the retest, and that's when you squeeze. Over here, same thing. First bottom, try peak, rejecting that resistance. Second bottom, slightly lower low, uptrend breaks you out of the macro, retest confirmed. Now we have this uptrend. This will be taking us to our squeeze. So once again, jumping into the macro time now. So on the left would be the January 2020 cycle. On the right is our current cycle. We are tracking this perfectly, this green, red, and blue. We are tracking it perfectly, the only difference being that we're descending. Once again, the time range on each of the boxes here. In the 2021 cycle, 110 days in the green versus 118. The red box, 83 days here and 131 days here. So both green and red boxes are pretty much one-to-one. It's pretty close one-to-one as far as time goes. And then the blue box of January 2021 that took you to your squeeze, 148 days versus our current cycle of 310 days. Tracking perfectly, but tracking twice as slow now. So the green and the red are one-to-one. The blue is tracking twice as slow. And once again, the ape dividend being dropped in August, I believe had some effect on the algo. Slowed the algo down. Didn't change the macro. We're still tracking perfectly. We're about to squeeze. The only difference is that we are tracking slower now, twice as slow. Regardless, we're at the end. And I mentioned that multiple times. We found our breakout and the retest confirmed, and now we have this uptrend off of that confirmation that will be taking us to our squeeze. There's no more downside on AMC at all. Absolutely none. Higher highs and higher lows from here on out until we peak on our squeeze day. Looks very good, very bullish. That being said, once again, jumping into the trend angles on the blue boxes of January 2020 on the left and our current cycle on the right. Trend angle from the top of each box running down over your try peak where you get rejected, and then the breakout and retest on both minus 42 degrees. Low to low, 176 degrees over here versus 178 over here. Trend angles are identical. The movement's identical. The blue box in the middle would be your try peak in both. So you have your first bottom, your try peak, second bottom, slightly lower low. First bottom, try peak, second bottom, slightly lower low. And then you get that uptrend that breaks you out of the macro. And then you get the retest. Mentioned multiple times that we are tracking this perfectly, but we're tracking it in a descending fashion. And with that being said, I have also mentioned that the breakout of January 2020, January 2021 was flat. It was flat the whole time. The bottom was pretty much the bottom here. Very flat move, very symmetrical move, and it is a W. So you have a W that's symmetrical and it's flat in the January 2021 cycle. Over here, we have a W that is descending and symmetrical, and it's taking longer to play out. As I've previously mentioned, we're tracking much slower now. So we're tracking slower, we're tracking perfectly and descending. So we have a symmetrical W in a descending fashion. Perfectly symmetrical W so far. Turn your head to the right. That is a W. That is a symmetrical W. And that is a descending W that's taking longer to play out than this. Tracking perfectly. No complaints. Very bullish there. So once again, jumping into the breakout and the retest. This white line would be your macro and AMC. The red line would be the micro that kept us pinched down into a descending wedge. Testing on the macro. So here you reject, you find your breakout, multiple rejections off of the micro resistance, and that's so annoying. And the macro previous resistance acting as support was very strong here, had a few breaks below it on both legs of the W. I mentioned that already. January 2021 did the exact same thing. When that broke out, there was multiple breaks below the macro over there too. Same thing. It's tracking exactly the same way. So here would be your breakout and the retest. You have a W forming here in a descending fashion and symmetrically. From the confirmation of the retest, you form an uptrend that breaks you out of the micro, and now we have this uptrend that is very, very solid. And today, we actually found a bounce perfectly on the uptrend. Looks very, very good. Healthy pullback, tracking perfectly, exactly what I called for in my video yesterday. So I'll get into that. So the daily, where the hell is it? I have the same thing saved twice here. I guess I could just pull it up. I just want to show this really quick. Bear with me for a second. So the daily retest here, once again, you have your first bottom, your tri-peak that rejects that resistance, the macro resistance, your second bottom with the lower low that we got after hours, your uptrend that breaks you out, and then the retest that we spent a month in. That's a very, very long time to be spending in a retest. It's a macro breakout and a macro retest, so it makes sense. It's descending, it's a W, it's symmetrical, exactly what I've been calling for the past couple weeks, saying this is going to take time to play out. The breakout and the retest is going to take some time, and then the uptrend from the confirmation of the retest is going to take some time as well. I mentioned multiple times that we could expect probably 2 or 3 weeks in this uptrend back up to a double top at 650, and that's what it looks like we're getting so far. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So 2 weeks in. 2 weeks in from the confirmation now. Expecting to double top sometime next week, which would be 3 weeks. It looks good. This retest looks fucking insane. Held up very nicely. Very low volume, very barcodey, but it held up and it looks very good. I feel like I've seen this pattern before somewhere. It's like a star type bottom. I don't know where. I've definitely seen this before and it led to upside. I can't remember the chart that I saw it on. Whatever. With that being said, jumping into the micro now, we are tracking this fucking perfectly. So, getting into it once again, the yellow box would be your top, same move on both sides. From there, you break down into this orange box, which is more or less a W, with a lower low on the right leg of the W. You come up to the red resistance and reject there. Same thing over here. W here as well, come up to the red resistance and reject there. From there, you break down into the green box, where you find a catch on this white horizontal line, which is at the top of the red box. Over here, same thing. Top of the red box, you have this white horizontal line. That's where you find your catch, and then you reject off of the top of the green on both sides. From that rejection, you break all the way down to the bottom, where you find your confirmation of the retest, marked by the green arrows. From there, you bounce back up into the red box, where you have very sideways barcodey price action on both sides, same exact thing. From there, you break out, hit the top of the green box once more in both sides, double bottom perfectly, illustrated here with the purple circles at the bottom of the red box on both sides. You have a double bottom there. From the second bottom, you pop back up, reject the top of the green box once again, same thing here. Find a higher low, which we did, and then you break out of that to the next range. The horizontal lines that I have drawn, if you could see them, are pretty much perfect on both sides. They line up perfectly. The boxes pretty much line up perfectly. The price action lines up perfectly. It's literally tracking perfectly. Now, I mentioned not yesterday, but the day before, that we can expect a move to roughly 508. Just as far as touch points, that's what we could expect, was a move to 508. We got a move to 515. I mentioned multiple times the wicks are never going to be perfect, but it is tracking perfectly. Never going to be perfect on the wicks. We have a 1 minute chart versus a 4 hour. Never going to be perfect, but it is the same thing. So I was calling for a pop back up into the $5 range, roughly 508. I said you could find your high. We found our high at 515 and found a rejection there at downside into end of day yesterday. And in my video yesterday, I said, now we got the rejection off of this red horizontal line here that we can expect to come back down and spend all of today trading at the top of this green range here, this green, the green rectangle here, trading at the top of that as support and carving a bottom. And that is exactly what happened today. We actually double topped here at the 508 range and then came all the way down. And this is a 4 hour chart once again. So the 8 o'clock candle came down perfectly to 485. And then the 12 o'clock candle broke slightly below it. And I mentioned multiple times I would not be surprised to see that. a wick below that 485. I said we'd be testing support on the top of the green range here. Exactly what we saw today. From there, we found a bounce and then closed above the green rectangle, closed above it. So it acted as support. Exactly what I was saying. We were going to spend the entire day more than likely red, and we would come down to the top of the green rectangle and carve out a bottom, establishing support here. That's exactly what happened today. Now, with that being said, what do we expect for tomorrow? Tomorrow, I'm expecting green. Now, there's two scenarios here, and I'm going to mention the worst case scenario first because we're tracking slowly. So the next move we're getting is a move to the 530 range, and my point here being that it doesn't have to be tomorrow. We could be flat here in the same range tomorrow, establishing more support here. I mentioned we're tracking this extremely slowly. This is a 1 minute chart versus a 4 hour chart. So potentially the worst case scenario for tomorrow would be that we're trading sideways here again, really carving a bottom here on the top of this green rectangle, the 485 to, I guess it would be 480 to 490 range. We carve a bottom here. That's the worst case scenario. The best case scenario is we start getting the upside, and this is the likely scenario in my opinion. We would get this upside back up and potentially break through and find that high of 535. Maybe this all plays out tomorrow, or maybe we just come back up to 515 like this candle did right here. Maybe the beginning of the day is pretty flat, and then end of day you start curling up, and then you find that top at 515, and then Friday we would potentially get the rest of this upside, or tomorrow we just get all of the upside to the 535 range, and then Friday we would more than likely have a very similar day to today. The same day that we saw today, we could expect Friday if we get that move to 535 tomorrow. So it's tracking perfectly. Exactly what I called for in my video yesterday is what happened. Exactly what I called for in my video the day before is what happened. We're tracking this perfectly. It looks very, very good. The reason that I think that we actually start getting that upside tomorrow is because of this, this is the daily price action on AMC. Here would be your opening candle, your 930 candle, where you break down and find your first bottom at this 485 range. You have your first bottom there. This would be the top of that green rectangle that I just showed you, establishing support on top of this. So you find that first bottom there, and then you bounce up, and then you have this descending resistance. You reject there, reject again there, come back down, come back up, reject again, come all the way back down, break slightly below 485. I mentioned multiple times I would not be surprised to see that. Find a bounce there, double bottom perfectly right there, and you start forming some higher highs and higher lows. Actually reject the top descending resistance again, come down, break through it. That was a fake out. You break back into it before breaking out of it again, and then you come down and retest perfectly right on top. And then after hours, we closed on top of the descending resistance of today's price action, and after hours we're trading above. I believe we're seeing some upsides, like an uptrend, I should say. So going back to this, once again, today was exactly what I was expecting, exactly what I called for my video yesterday. Because we broke out of today's downtrend, I would not be surprised to get this upside tomorrow to 535, at least starting the upside. So that's what we're looking for tomorrow, is a move to 535. Doesn't all have to happen tomorrow. Like I said, it could come up to 515. That could pretty much be your day. Your day could be sideways for the first half of the day, and then around lunch you start curling back up. Find high of the day 515, something like that. More than likely, I think tomorrow we're going to get this move to 535, but we'll see what happens. Regardless, it's tracking perfectly. I can't be perfect with this. I can't be like, okay, yeah, tomorrow we're going to get this move, because we're tracking this extremely slowly. Like I said, 1 minute chart versus a 4 hour chart. That being said, tracking perfectly, and it looks very, very good. SPY looks very good. AMC looks very good. The market's about to squeeze. And that is pretty much it for the video. I will catch you guys in the next one. When the time gets closer, I'm going to go over price targets and everything. So once we finish this iteration here, I mentioned that once again this is a W, it's symmetrical, it's flat, and over here this is a W, it's descending and it's symmetrical. We're going to be looking for that move up to the double top that should be slightly higher than the 620 that we saw at the breakout. So I'm looking for $6.50 to $7. When we get that, I'll start touching on the Fibonacci extensions and the possibilities for the squeeze. I'll just say it now. The two scenarios that I have that I think are the most likely. Number one, I'll just touch on this really quick. I'm not going to get into it, but I could touch on this really quick. So we're tracking this macro perfectly. So the green, red, and blue box here led up to the January squeeze. Then you come down and you get the June squeeze, and then you get this flag. You break down from the flag, and then you reset back into the green, red, and blue. So scenario one would be $140 would be my price target based off macro Fibonacci extensions. So it's possible what we get is a squeeze to 140, and then we come back down and play all this out, and then the June squeeze, the quote unquote June squeeze that we saw here, would potentially be your MOAS, or we just MOAS now. Those are pretty much my two scenarios. The only two that make sense to me. So that's pretty much that. I mentioned as well, and I could say this again here while I'm here, that the green, red, and blue is a macro fractal. One fractal here. Green, red, and blue is one macro fractal, and below is the blue, the end of the macro fractal, where you gap up, and this is the macro fractal break that takes you to your squeeze, right? So this is one fractal here, and then you squeeze in January, come back down, squeeze again in June, and you get the flag, and then you break down from the flag. So this would be a macro fractal now. The January squeeze to the end of the flag from the June squeeze would be a macro fractal. And then you reset back into the green, red, and blue, like I mentioned before, and this now is a macro fractal. So, like I said, we're looking for this $657 double top here that we saw in January. From there, we will get our macro fractal break, which is this gap up to the tri-peak around $8 to $10. It's possible that this next macro fractal plays out completely different than what this did. It's possible it plays out exactly the same, and it's possible that it plays out differently. And the two scenarios I just gave you are pretty much, those are the possibilities in my opinion, where you can get 140 now, come down, and then MOAS at a later date, or the next macro fractal that we get is the MOAS. So it would just be a straight line to whatever price AMC goes to, and then that would just be the end of the play from there. So those are pretty much the two scenarios that I see for our squeeze. When we get closer, when we get that double top at $657 and get that gap up to the macro fractal break, I'll touch on it in depth, thoroughly, what I think the actual scenarios are, and show you why and my reasoning why. So with that being said, that's the video. I'll catch you guys in the next one.